everybody, welcome back to our channel Matho Techniques. Today we shall do another concept of GST which is called as input tax credit. Now what is this input tax credit? So when any dealer deals with any product, he's selling a product, he's manufacturing that product himself, okay? So he's not manufacturing it with all the inputs that he has. The raw materials are not completely owned by him, so he has to take the inputs from some other dealer, and then he makes the product and then he sells it. So for easy understanding, I've just put it on the board. So input tax credit is while paying tax on sale, that is on the output, the dealer can avail a tax credit. Okay, he can get back the tax that he is paid on his inputs. Okay, so the tax can be availed back. He can take it back from the government what he has already paid for his inputs on the purchases. Okay, so that is the meaning of input tax credit. So whatever inputs that you have taken in making a final product, okay, the tax that you have paid on it, you can avail it back when you sell that product and you pay tax on the output. You will be more clear when I show you the example. So if A sells a product to B at 500 rupees and B sells the product to C at a profit of 200 rupees, okay, and if the GST is applicable 12%, if the GST applicable is 12%, they are asking what is the tax paid by B. So B has an input and an output. He is buying something from A at 500 rupees and he is selling it to C at 200 rupees profit. That means 500 plus 200, he is selling it to C at 700 rupees. So he has an output, he has an input. Okay, so what is the tax that he pays to the government? Okay, so his input cost is how much? 500. Okay, he is buying that product from A at 500. So his input cost is 500. Okay, so the tax that he pays on input is how much? 12%. He has to pay 12% GST on the input also. So he pays how much? 12% of 500. How much that will come? 60 rupees. Okay. Then he's selling it to C at a 200 rupees profit. That is 500 rupees is his cost price, 200 rupees is profit. So his selling price is equal to cost price plus profit. So 500 plus 200. So he's selling it to C at 700 rupees. So B is selling that same product to C at 700 rupees. Okay, because he is adding some value to that product and selling it, right? So always the output tax will be greater than the input tax. Okay, because the output will be, any day a person buys raw materials from somebody at a lower cost, he will put profit and then only add the sell it to his customer, right? So that is when he'll get profit. So he is selling that product to C at 700 rupees. Okay, so his output is how much? 700 rupees. Okay, so he pays 12% tax on his output also, right? That's how it's calculated. So he pays 12% on 700. That comes up to 84 rupees. Okay, so 12% is there on his output, 12% is there on his input. So he is paying, he need not pay this double tax to the government. So what the government is told, you can avail a tax credit. That means you can ask for the input tax that you have paid, ask them back, ask the government back to give back this input tax that you have paid, that is the 60 rupees. Okay, so for this you need to register. So there are other formalities that a dealer should be having. He should have a registered GST number and all that. Okay, so when he does have this GST registered number and all that, and he is filing his GST, that is when he does all this. Okay, so when he is doing that, he is liable to pay only the differential amount of his output tax and his input tax. Most of the time, not most, I think 99.9% of the time, most 100% of the time you can say, the output tax will be greater than your input tax. Okay, so the government is not asking you to pay 84 plus 60 rupees. For your input also you pay tax, then for your output also you pay tax. That they are not telling you to do. They are telling you to pay the differential amount. So for the output he pays 84 rupees. For the input he pays 600 rupees. So he needs to pay only 24 rupees as the tax. Okay, because he can take a tax credit on the input. Okay, he can take a tax credit on his input. So for this deal or for this product, for this item that he buys, he needs to pay only 24 rupees as a GST. Okay, because he has a input tax credit. This tax will be credited back into his account. The input tax that he pays, it will get credited back to his account. Okay, so for that he needs to file it, like how you file your income taxes, you need to file your GSTs also. So when you file it, you can say this much was my input tax and this much is my output tax. So the input tax will get credited to your account. You need to pay only the output tax. So in this case, in this scenario, he needs to pay only this 24 rupees that we calculated. Okay, he need not pay 60 rupees for input and 80 to 84 rupees for his output. He need not do that. He needs to pay only the differential amount which the government is asking him to pay. I hope you're clear on this. This is the input tax credit. This is one more concept of GST. I hope you're clear. If you do have doubts, you please do comment on my comment sections below. You please go through my playlist also, as I recommended to you previously. If you go through the playlist, you can go through each and every group of playlist like chapters in your textbooks, so it is easy for you to understand, which will give you a base foundation, and then you can see how it is built over. That same topic is built over, so this will give you easy understanding of the topics and easy to follow. Do like, subscribe, and share our videos, and do join us in the next video. Have a great day. Bye.